Hi, everyone. Welcome back to The Big Picture and Happy New Year, everyone. Joined today by my fantastic co-host, Crypto Vol Guru Greg Magadini from Amber Data and Crypto Vol PM in Twitter sensation Marty. Very excited to kick off The Big Picture in 2024 with Kelly Greer, one of our best guests that we've had on the show. I don't just say that. I don't say that to everyone, trust me. From Galaxy
Joe.
Digital, back on the channel. So Kelly runs sales in the Americas for Galaxy. We go back a few years from our days back in banking. Excited to be back with her in crypto. But before we begin, we're quickly approaching 1,000 subs. Our goal is to hit 1,000 subs on the channel after this episode. Please subscribe, like the video, help to get our content out to as many people as possible. But Kelly, welcome back to the channel.
Thank you. Thanks for having me. Happy New Year, everybody.
Yeah, absolutely. And kind of just for our new viewers, I know we did this last time, but if you can just give like a quick background on yourself, how you got into crypto from JP and kind of what you're doing at Galaxy.
Yeah, totally. I, like you said, run sales in the Americas for a trading business at Galaxy. Galaxy is a investment firm for crypto. We serve institutional clients for investment banking, asset management, venture capital, and trading, which is where I focus. I've been here for 3 years. I came from JP Morgan, where we worked together, Joe, in the equity derivatives group. I spent the first 5 or so years of my career there trading with institutional clients, mostly in OTC derivatives. And so doing a lot of that in crypto now. And yeah, that's the wrap.
All right. Awesome. Yeah. Thanks for that. Let me just share my screen. I know, Greg, you have some amazing charts for us to kind of kick off the year and talk about what's interesting ahead of the ETF approval. Let me share that screen now.
So this first chart is really interesting. So past couple days, we had a massive kind of up candle, green candle, and then give it all back with a big red candle the next day. So what I'm looking at here is the Binance per open interest buildup. And so what we can see here is that there's liquidations on the bottom, and then the size of the little bubbles are also liquidations. So as we rallied to the 45K level and slightly beyond, we saw some buy to cover liquidations occur. But what's really interesting is those horizontal dark blue lines, that's OI building up. So what we do is we look at buys and sells for each 5 minutes, and then we essentially look at the impact on open interest, and we can see if longs are being established, or if net longs are being established or net shorts are being established. Obviously, for every buyer, there's a seller, but what we do is we see is if open interest is going up and the aggressors were net buyers, we assume that net buyers are establishing longs. And so what we can see is that when we broke out beyond 45K, open interest started to be built up from net long aggressors, and that dark blue line is really sort of a liquidation level, an estimated liquidation level. And so we can see there's a lot of OI built up by the darkness of the line. And so we sliced right through there, and then we got that big sell-off yesterday, going down to slightly below 41K. So that was something that was really interesting. It caused a lot of liquidations. People kind of got caught off guard and got a little bit complacent, getting leveraged long post at $45,000 break. So if we go to the next slide, what's really interesting to me is the impact on the vol surface. So if we look at the expiration for tomorrow, we could see that when we got that big sell-off, 2 things occurred. One is we could see that the put skew decided to sort of become more symmetrical. And then the second thing we can see is that we didn't get like a massive reaction in parallel vol. So vol ticked up a little bit, but most of the reaction to the sell-off was the put skew lifting. If you go to the next page.
Can we talk about the liquidations for a second?
Yeah,
Sure.
Let's do it.
I think that was like a blessing in disguise for us ahead of potential ETF approval maybe next week, right? Like things were getting very heated up. Like CME basis was like 50% annualized a couple nights ago at the start of the trading year. And so now we washed out a lot of this sort of complacent capital that Greg said that was levered long. And so going into a potential big catalyst, we sort of reset things. And so we kind of have a sense of where the market floor is moving into that.
Yeah,
I agree there.
Yeah, I guess that makes sense. I mean, look, we were chopping in this 42 to 44 range for a while now. You know, you're seeing all these articles that, you know, the ETF is priced, you know, probability at around 90%. We kind of break through that sort of 44 resistance that we had. And not to be crude, a lot of dumb money kind of just piled in. I mean, you know, that being said, whenever we've kind of like broken out of the range, that's kind of been like the next sharp move higher. But it kind of reminds me of that fake out that we had. Do you remember that fake out we had back in July where we were right around like that 30K level? Then we went to 31K and we saw everybody come in and just completely top tick the move. And then over the next couple weeks, we dragged lower to like 27, 26K. I'm not saying that's exactly the same. There is just something that kind of reminds me of that. And then the institutions coming in and, you know, effectively just wiping out a lot of this open interest. So, I mean, it does feel a lot cleaner. How about you, Marty? What do you think?
On the retail side, when everybody on Twitter is balls long making money and paying whatever funding to stay long, at some point somebody has to lose money for us to make money, right? So I'm glad that there was a good washout. I'm tired of everybody being like, oh, it's so easy. It's so easy when everything's going up season, but you need a flush out. And people were just the other day, I saw a guy, I guess this morning or yesterday, like, oh, why don't you stop losses? And then boom, wiped, lost like 200K.
Oh man,
God, I think I saw that tweet too.
Yeah, I think it was yesterday.
Yeah.
So reset, the great reset was good heading into the approval. I still think we get like a Darth Maul or something, right, where nobody knows if it's good or bad. We go both ways, and then once it starts trading, then we can actually see the real flows and see how this ETF will help us out.
Makes sense. This chart, Greg?
This chart. So yeah,
Cool.
to everyone's point, I mean, we got a nice flush out in futures, but my thesis is that the vol market is still kind of priced all like everyone's going the same way. So if we look at the skew, this is the risk reversal skew, and we can see that orange bar, horizontal bar is the zero line. So we basically on that sell off, we basically touched symmetry, and then we're right back towards essentially call bias, essentially back to the highs of a call bias. So that's kind of interesting. And then if you go to the next slide, when we're talking about absolute vol, this is this term structure. Obviously, we have a nice kink for that January 12th expiration, which is going to get, over the next 7 days here, we might get some sort of announcement. But in terms of variance risk premium, we're way above realized. And so essentially, we could get a big catalyst, but I also kind of think that the way things are priced right now, we're priced for perfection. We're priced for ETF approval, and that ETF approval is enough of a catalyst to make up for this vol premium. And then if you go to the next slide,
not to put you on the spot, Craig, do you know what is the current, I guess, in spot percentage move, roughly the expected move that we'd expect kind of on the event? Like, let's assume that the event happens on, Jan 11th.
Yeah, so square root of 365 is about 19. So then you basically take this, call it 75 vol, and then you divide it by 19, and you essentially get a little shy of 4% move per day. And one of the things you want to think of is that if we're looking at a 7-day contract and there's maybe one vol event and then the other 6 days are nothing, you want that one vol event to make up for those other 6 days where there's extra vol being priced in. So long story short, if there's a premium of about 2% per day, you're essentially looking at like a 14, not a 14, but maybe like a 10 to 14% move is the real.
Yeah, well, I mean, that being said,
Good
I mean, the
mental
vol
math,
that we've
Greg.
had to start the year has been pretty crazy, right? So who knows if we continue to have that sort of whippy price action, then maybe you don't need to have such a massive move. We'll see, though. I don't know.
I like the chart
And it
before
just keeps
this, Greg.
climbing into the event, right? It just keeps climbing. Like last time we showed that kink chart was 60s, 50 and 60. I think forwards were 60s, and now forwards are 70, 75, right? Like it's just growing into this event, which is fun to play and fun to see.
Yeah, Kelly, you were saying something?
Oh yeah, I like the chart before this on the skew. Like yesterday's sell-off, if we go back to show the like there was not a lot of panic in the options markets. There was like some put buying that went through, but what Greg's chart's showing is that on net as a whole, options buyers weren't panicking, and you didn't see skew steepen and a like outsized demand for puts. There was just more demand for upside going through the market, and we've seen some of that starting to build up from the start of the year after expiry, where like tons of in the money calls expired. So I think that just reflects that there was not a lot of weight put on the note that sparked yesterday's event.
Yeah, I mean, even just going back, looking back to last year, whenever we really had those big sell-offs, literally outside of kind of like that Silicon Valley Bank sort of issue, we never really saw any sort of panic buying, at least in terms of the flows when you would kind of get these sort of big sell-offs. What we've just been seeing is like we have a big sell-off, and then the vols reset lower with the spot. Some people are using it as a buy the dip opportunity, but others are kind of just sitting on their hands because they're still persistently bullish. So
yeah, I think the expiry, like 60% of the OI that rolled off were calls. So Bitcoin participants like the calls. To your point,
we see very little put buying. Like the only put buying, and Greg, I know you have a slide on this, is like callers, like buy put sell call sort of stuff. So
up only.
Greg, which slide? This one or?
Just real quick, I'll just touch on this one, and I'll jump into the other two after. Cool. This is just a term structure. Right now we're in backwardation, and this is just showing us sort of the level of backwardation, historically speaking, for 2023. So again, price to perfections. This is how I'm viewing it, anyways. If we jump to the next slide, jump one more.
Yep.
So we did some interesting analysis on BTO open interest. Kelly said this last time. BTO is a product for traders, by traders for traders. I thought that was pretty cool. So if we look at the BTO open interest benchmarked against Deribit's open interest, we can see that last December, the open interest was 6.8%. And in this December, it's 8.5%. So, okay, we got a little bit of growth in BTO. Benchmark against Deribit notional open interest increased about 45% year over year. So that's pretty interesting. And if we jump to the next slide, this is really the key, I think. This is going to be calls divided by puts. We can see last December, BTO calls were 95% of puts, so a little bit less than puts. But in this December, BTO call open interest is 350% of puts. So all the growth in BTO open interest is all on the call side. And this is really interesting because it's just a different audience from the Deribit audience. Like by law, BTO people can't trade on Deribit. It's true that Deribit people could trade on BTO, but for the most part, I think these are separate audiences. And so it's really showing us a shift in sort of that US appetite, really leaning on the call side. And so long story short,
Yeah.
I do think these calls are priced for perfection.
That ties out with the CME rates pumping on Monday night into the first trading day of the year. Like a lot of institutions in the U.S. buying long exposure on Bitcoin futures, which they obviously wouldn't be the target audience for Deribit.
Yeah, what basis did you guys end up seeing for that? Because I know basis has been going kind of crazy.
It hit around 50% the evening of when prices were pumping on the 2nd or the 1st, and it's come down a bit, especially yesterday with the washout. It's around 10% now.
Dang, 50% is nuts.
Yeah. Yeah, we definitely saw interest to come in and flatten that out the morning we walked in yesterday.
That's super interesting. Last slide here. So here's how I would play it. If I still have like a long delta bias, I really think you just collar it. You can basically buy the $40,000 put for Jan 12th expiration, finance that by selling the $47,000 call. You basically own one whole Bitcoin that's now hedged. Your risk reward, we've bounced here overnight a little bit since I made this slide, but when I made this slide, you're risking 2.8K to make 4.2K in the announcement. This is interesting in the sense that you can carry your long bias, but in a reasonable way. Or if you want to be a little bit more sophisticated, you could just do a delta hedge, selling the risk reversal. I think that's pretty interesting too, assuming that vol is going to be coming in lower than what's being priced in.
Yeah, we literally just saw this exact same trade go up this morning in the Jan 26 expiry. I don't, it wasn't the exact strikes. I think it was kind of like a 40, 42, so closer to at the money, 42, and then selling like a 46. But yeah, kind of similar sort of idea of just collaring their existing positions. I mean, and kind of on that sort of note, I mean, Kelly, what are you seeing from like the long holders, like the miners and that sort of community on this rally? Are they still engaged in, their overwriting and collar strategies? Have they taken a step back given, we've just been absolutely ripping? Just curious.
Yeah, less interest in overwriting as of late. We've actually seen some interest return in selling puts the past couple weeks, which is reflective of, traders calling a bottom and vol sort of makes that worth it now to take that risk. So yeah, and then a little bit of using the spot to sell futures against it to trade the basis, like we said. But yeah, I think some overwriting will always have its place in crypto markets. We continue to see that, but a little bit more of a mix up. Some have stepped back, some have sold puts, and we're still seeing more demand to buy things like calls and call spreads, with call skew being a little steeper at the start of the year.
Yeah, makes sense. How about you, Marty? I mean, I know you're very involved with a lot of these like DeFi protocols, and certainly a lot of the DeFi volumes have been taking off quite a bit. What are you seeing in that space lately?
The DeFi guys, it's a different breed. They're just aping outright calls. Yeah, there's no strategy. There's no nothing. Most of the flows are just like outright calls. Somebody was trading like 3K strike into this right at New Year's, 2,600 ETH calls, but no complex or multi-leg strategies. And a lot of the DeFi products, it's harder to put on a leg trade as well, right? It's either the pricing is wrong or there's not enough size to sell the call, to build out like a multi-leg kind of strategy. So just aping calls.
Avo's doing
and
that,
and
right?
and altcoin vol too, like aping Arbitrum. Arbitrum was up like 20% yesterday, right? So aping Arbitrum calls, aping Optimism calls, all this, but we're not talking like billions of notional, right? We're talking
Of course,
millions. Yeah.
right.
Mm.
And
Some
do
people
these
are
guys?
building multi-leg strategies but some of them are like 1-2 days out, a week out. It's just it's not there yet.
Right.
Is how I would word it. It's not there yet.
And do you see these guys? I mean, given it's just like a lot of retail aping, just like buying the highs and spot and vol, is that tend to be the theme? People just try to, you have the big
Yeah.
10% move, and then there's like, F it, I'm just going to continue to try to chase it higher and pay
Yeah,
up
like a
for it.
TWAP the top. Yeah, TWAP the top and, chase the top. And then also there's a DeFi premium sometimes. So sometimes people are willing to overpay 5 to maybe even 20% to buy calls. So, as a seller, that's always amazing when you can just instantly you can hedge out exposure, right? Buy on one or sell on one and hedge out the exposure on another protocol or another exchange.
Right. Kelly, do you have any? I remember seeing something. It was like a few months ago where you guys like did the first like DeFi, I guess, OTC trade on Avo, because aren't they offering, like a block strategy sort of solution? I guess that's kind of similar to what we're doing, but just for DeFi.
Yep, we did a trade earlier in 2022, actually with CoinFund, through Avo, which is it sort of RFQ based, sort of quote unquote OTC options on chain. So we were excited to participate in that, and big fans of that team and what they're doing. I think obviously there's a ways to go, like driving efficiency and margining and things like that, but excited to watch that grow as it goes further.
Yeah, definitely. We love that team. I mean, they're basically in the same office building as us in Singapore, and we've been working with. We used to work with them a lot on like the DOV DeFi side as well. Yeah, but totally agree. Have a ton of respect for those guys, and hope it continues to grow. But cool. Let's go over, I guess, a couple more things. We're already on 20 minutes, so we'll keep it relatively short. But so on the flow side, kind of what Kelly was saying around, like a lot of action in the call spreads. The biggest upside trades that we've seen have certainly been buyers of Jan call spreads in BTC and ETH. And if you just look at the number one spot, the top structures that have traded over the past week, 1,500 of these Jan 4250 call spreads. That was adding on to an existing position that traded actually earlier in December. So call spreads kind of, slightly in the money, selling that expensive upside wing to fund the purchase of the roughly at the money call. And, I guess it's interesting. I mean, Jan 26, certainly trading at a 9 vol discount to the 12 Jan bucket, kind of avoiding that, given it's the highest point in the term structure. But if you guys remember from the last episode as well, the massive Ethereum call spread that we talked about, 45,000 of the Jan 2400, 2900 call spread traded back in middle of December. So, very similar trade in terms of moneyness, and certainly the biggest trade that we saw short dated in December. But kind of just moving on very quickly, we're really trying to up the game around the analytics, at least on the paradigm side. And Greg, the charts that Greg does obviously are unreal, so I'm trying to catch up to him in terms of sophistication. But outside of the Jan upside, we continue to see selling of March to buy June vol in calendar formats. So the big trade this week was this March 60, June 70 call calendar 1,100 times, which is just continuing to drive very significant Vega figures in the March and June buckets. So if you look on this chart here, so this is cumulative net taker Vega that is traded over the past month, and about 700K Vega of June 50 to 70K strikes have been bought by takers on Paradigm, with basically sellers non-existent. And kind of just for clarification purposes with this chart, we're just looking at the Vega at trade initiation. We're not, we know that Vega is dynamic and spot and vol and time, but for simplicity purposes, we're just looking at Vega at a trade initiation. But I mean, it's been crazy because these flows have been so one way with sellers of March and buyers of June, and I think there's maybe even something to be said around like starting to put on these sort of calendar trades ahead of the halving that we're going to see later this year. I can't speak to if that is the reason, but we are seeing a lot of sellers of March, a lot of buyers of June, and it's completely destroyed liquidity in these buckets, especially look for those. We had some guys yesterday that were trying to come in, just buy some outright, just June 55, 60 calls, and the liquidity is just, pretty disastrous out there. It's literally the only flow that you're seeing out there. And it's just very difficult for makers to recycle this risk when the flows are so one way. Kelly, have you seen any like these longer dated sort of flows? Because like a lot of these flows are kind of coming from the sort of like OTC dealer side. So I'm curious if you're seeing any like longer dated sort of flows that are potentially leading to these flows on Paradigm.
Yeah. The day-to-day flow, I think, by the fast money community is for the most part shorter dated, but the folks that we see who look at longer dated structures tend to be like traditional players who might not want to or are able to custody spot yet, but want a long delta long-term position. So we do see a bit of that.
Got it. Interesting. And I mean, Greg, what do you think about the gamma dynamics here? I know Kelly tweeted about these in ETH, I think about a week ago, 2 weeks ago, and potential significant squeeze that we saw in Ethereum up towards 2,400. But curious to kind of hear what you guys think in terms of these dynamics, if they're still in play or not.
Yeah, I think the interesting thing is we saw this with the BlackRock Bitcoin announcement back in June. It created like a massive rush to buy optionality. And then when we had BlackRock, say that they're planning to do a spot Ethereum ETF as well, we got that same type of option demand, which sent net gamma negative. But that's actually flipped back since then. So I don't know if there's like a call overrider who's still around, who's still doing that same type of strategy. I suspect that there are a few. And so I don't think that flow is necessarily going to change structurally. So it kind of makes sense to me that dealer ETH gamma exposures is net positive again. And so we can see here around spot, we're slightly negative, but most of the profile is net long gamma for dealers, which is really interesting for the relative vol positioning, because there's a lot of demand for flipping ETH implied back over Bitcoin implied, and there's a little bit of a realized argument to be made there. But in terms of sort of systematic flows, if this continues, maybe Bitcoin vol is just higher than ETH vol again in 2024, like it was in 2023. So just something to consider.
Yeah, it makes sense. And I think at the beginning of the week, I saw some of those infamous overwriter prints start to come back into the market a little bit. But we'll see if that continues. But great, we're right on kind of approaching 30 minutes here. So Kelly, thanks so much for joining. It was a really good episode. Greg, thanks so much for the charts, and Marty, as always, I mean, the color on DeFi was really good. But happy New Year, everyone.